Hello, accounts people. Time to have a look at a practice paper. I'm only going to do it in a couple of tasks at a time because this is a 3 hour long exam and a lot of students get very close to the 3 hours. It is possible students have been known to get 100% in this exam in the last few years because they're mastering the written task, because that was always what stopped students from getting the full marks in the past, so it is now possible. However, it is a psychological battle. You've got to read carefully and be prepared for a big challenge of a long, hard exam. Let's get on with it anyway. So task 1 is one of the easier tasks. The whole thing is 140 marks, so this is 10%. 140 marks in 3 hours. The written ones are not whole tasks, but parts of each task, so some have a little bit more written than others. You do have to get marks in the written tasks. We'll worry about that when we get to one. So budget based on a single assumption. Might as well go straight into the questions. So okay, it's a budgeting task. So remember, if you know the history of this, it used to be 2 exams. That's a fixed budget, because the budgeting exam used to be a separate unit. Did have a much higher pass rate than the MDCL parts, although there was one particular task in it that is still in this exam that was done really badly. It's effectively task 2, or the closest to it. So when you're doing these questions, you've got to read carefully. There is a clue. It doesn't change within a given range of activity increased by a fixed amount. That means it's a step fixed cost. Because you might want to do what I've just done, start off on this task, or you might want to do task 2 and then come back to it, get your mind on the budgeting, or a lot of students have quite happily left this task to the end, by which time they're reading and digesting and thinking along the right lines. There's enough practice papers from all the publishers available. So this is one of the publishers ones. Osborne, as usual. I don't like doing the AAT ones because students have a habit of looking at somebody doing it before having a go themselves, which is losing some of the learning potential. So if you do watch a video, somebody doing an AAT practice one, there's nothing wrong with them, but have a go at their paper first. Staffing levels. The key is staffing, which means it's got to be HR. Future production is, of these options, production planning. There we are, best option. Training staff, well, of the options, might be in a real company, somebody else's job, but we've got a training manager. That's definitely the answer. Budget assumptions. These are the people that look after the overall budgets, if they have one. A budget committee, maybe just an ad hoc committee, people who approve the budgets every year. Might just be the directors on a different company. And then how do we treat the costs? Royalties will always be a direct, because it's based on the products. It's directly related to the products. It may sometimes be an annual fee or something like that, but it's still directly related to making something that somebody else has designed and holds the copyright or trademark for. Trade exhibitions was marketing, so selling and marketing. So this one's marketing overheads. And then quality control is a really good example of activity based. So many inspections per unit or per 1,000 units or whatever. And then factory machinery, the installation is part of what we can capitalise. It's part of the cost of our machinery and therefore gets depreciated. Notice it just says installation, not installation and cost, but it'll be added to the cost. You would have done that level 3, obviously the rules. And then this is actually the depreciation of, so if anything was going to go wrong on this one, it would be students saying capitalise again when it is the end result of the capitalisation. So it could, second best answer, activity based, but machine hours is much easier. You know how long the machine is used for. That could still be built into an ABC, activity based costing situation. New computers, after sales support team, but there's no departments or anything like that, so that is just going to be another capitalised and depreciate item. Doesn't matter, it's not equipment, it's still computers. It just isn't manufacturing equipment. So flexible budget, trace, okay, read carefully. Different volumes of activity, yeah. Now this is one of the shorter tasks at 14 marks. So you can see the end of task already, pretty much 1 mark per tick or box. Participative, if you participate, people get involved in it, so no. And simulation, multiple variables are adjusted, yeah, sounds like a simulation. A trial, basically, and a rolling budget update at the end of a period of time, yeah, normally for a year or end of every month or so. There we are. So nice easy answer. So rolling budget where you get to the end of a month and then you prepare the one that's effectively next year's equivalent time period. And now on to some number work, which will make most students happier. So not meant to be that easy. This is a budgeting task. Let's have a look at what we can see. 33 marks out of 140, so 140 marks in 3 hours. It's basically a mark a minute plus a bit extra on the written and a little bit for checking, so this can be 30-35 minutes worth of work under exam conditions. So a beast of a task, including the written bit at the end. So read the information carefully, a little bit like some of the tasks in DAFE. You'll be going up and down the paper looking at information, and obviously picking the information off the screen is half the battle. What have we got? We have a production budget. They are starting off with 6,000 finished goods, so it's not materials, it's finished goods. So it could be a similar question based on materials. They're going to make 21,000. Sell 25,000, leaving them with 20,000. This is pretty much the classic version of this question. There's quite a few other versions, the same kind of number work. So you've got to make sure you practice a variety of questions, not just the ones that you like doing and can learn to do, like this one. So 3 working schedules, that's part A, B and C, and then a little bit of written stuff. Just no harm in having a quick look ahead of what's coming. Closing inventory, budgeted purchase price. Well, we've got this because they're going to buy them in. There we are, 60,000 kilos, £150,000. So we've got to work that one out. £2.50. We can double check. So we've done that before anything else. Used in production, okay, they start off with 28,000, then of course we're making 2.75, they're making 21,000. So they're using 57,750. So there we are, nice easy, 50. Effectively they're using FIFO. They could tell you that you're using FIFO. This one probably best work backwards, because we know that this is going to be that 5,050 is at the purchase price that we've just worked out. So we know that the closing inventory under FIFO would be 12,625. I'm going to worry about batches of this or anything else. You could also work forwards. You would work out that of that 57,750, the first 2,800 kilos were totaled 9,720, which isn't £2.50, and the rest of it, the 50, just under 55,000, so 54,000 and something or other is at £2.50, which is a bit more complicated. So much better to do that way. 4 marks. 3% give or take. 10 minutes to make, so it's a labour budget, 18 direct labour employees, 180 basic hours, additional hours are paid at overtime. So we can do the first bit. Basic time is literally as simple as the 180 times. So sometimes the beauty of this paper is that there's an awful lot of marks from some simple number work. Now, we would, however, have to check 3 to 40. Do they actually need 3,240 hours? Because there is a possibility it would only be 3,000 hours or so. We haven't actually worked that one out, actually. If it's 10 minutes per item and they're making 20,000, sorry, 21,000. Might as well make a note. They actually need 3,500 hours. We could actually put that one in here, actually, 3,000. That means they need 260 hours at overtime. So this is the easy one, obviously. This one, it will be 13. Mr. equals sign equals 13 times 2 and time and a half. The premium, in other words, the half bit, is included in the labour cost, so we can do times 18 times 1.5. 7,020. Have I got that right? Hang on. 2 G. Only that I've got an answer. 13 an hour. I was going to say I noticed. Oops. Hopefully you spotted that one. Oops. And now we've got our total cost. I knew something was wrong. I just thought that's not right. I'll pick up 18 instead of 13. If you spotted that, well done. You've actually just hit one of the problems on this task. Right, so what have we got? We've now got a partially filled in box. Overheads, well, we know the 3,500 is total labour hours. We've already worked out that it was 3,500 hours. So is £6, £21,000. We've got fixed overheads, and so we've got our total overheads. So that's our mini workings out boxes. Put the marks, 10, 13 marks there. Almost 10% of the exam. And now just fill in the big traditional table. A lot of questions have only got part of one of these, but if you can do the whole things, you should be okay. So most of the information here is coming off the calculations we've just done. Read carefully, because at the top they actually sold 25,000. £12.50. So that's their sales. We've got the opening inventory of finished goods. That's obviously that's last year's figure, so that's been given. So the materials is we've just worked out, and we need to pick up the right figure, the used in production figure. That was with a formula, so I will just marketing, and then the labour again. We haven't got to worry about that, we're just going to worry about the total here. And then the overheads. Again, that wasn't a formula, was it? So I'll do it that way. Total cost of production. Don't forget to include the opening inventory of finished goods. I have seen students, I've marked plenty of these, so yeah, I'm fully aware and have seen that plenty of times. Should come to 282. Actually, I'm just thinking about it. Do we include the opening inventory? Actually, no, it's total cost of production, actually. So, no, we don't actually want the F52 in it. Different question, different wording. If it didn't say total cost of production, you might want to include 60,000. I don't think that would lose you too many marks. It's going to be manually marked. Because as long as you remember you've included it, it's not going to be an issue. Closing inventory, finished goods we've got here. Except we need that times, so the closing inventory of finished goods, we've got to have worked out the cost of manufacturing, which I'm just going to type in now and then explain how I got it. So that £10.60 was because we took the total cost. This was for of making, which is why we needed that figure, the 21,000 that we made. So that's where the £10.60 came from. So that's the 2,000 units at £10.60. Again, chance for mixing up the figures, forgetting to put the £10.60 in. So the cost of goods sold, as it's laid out this version, we now include the opening plus that minus what we've got left. Fairly routine. Gross profit. It's almost becoming financial at this point. 51,100. We've got some admin overheads. £24,500. So we can now do our final cost. Not F64, F60 minus F64. Right way around, 26,600 again. So 8 marks. That is the most common version, the very traditional paper, but we do know there's a lot of variations on the theme. The same knowledge, the same skills in terms of operating budgets and costing up budgets, so planning and assumptions. And then we've got a cash flow forecast. Again, different version of the question. Now, again, you may get this, you may not in the exam, or a different version, same knowledge, same skills, just lots of different ways of giving you the same question. And they've started off with an overdraft of 5,325. And what's actually going to happen now? Obviously, a lot of these numbers relate on the information you've got before, like the sales value. However, if you wouldn't lose more marks if you'd calculated it wrong on the previous bit. So receipts from the customers is going to be the sales. However, the text is telling us that the receivables is going to go up by 25,000. It's 25,000 that we're not going to get. so we're only going to receive 287,500. Materials, again, this is about payables. So payables is going to decrease, so we're going to overpay. So again, pick up the right figure, because it's not the materials in the production budget, it's what we're actually buying, the purchases plus the 16,000, because we're going to owe our suppliers a bit more at the end of the year. Labour budget, though, you can't have opening and closing labour, so that is literally straight off. Labour budget and production overheads. What does it tell us? Something here. Oh, depreciation charge is included. Well, of course, that's a non-cash expense. So that £7,000 isn't a cash payment, it's a non-cash payment. So if we take our bill of 31,315 and take off the 7,000, that's how much cash is going out. 24,315. Other overheads, payments in the year, they're year incurred, so there's no issue there. That's just going to find the 24,500, and they've given us that sum, which means you just need to add them all up. It would be nice if in the exam you could do it on a spreadsheet, because obviously in the real world we'd always do this on a spreadsheet, or have been doing so since the 1980s. 2,86905. So that capital expenditure had to be given, and then the closing balance. It's the opening balance plus the receipts minus our payments. Slightly improved, but still overdrawn. There we are. So a nice little cash budget. Ideally, making sure you understand. If you've done the cash and financial management option before this will seem like a doddle, because this is easy basic knowledge from that. If you haven't, this is a bit of useful practice ready for that option. And now we've got a written one. So I've done extra work on written tasks on this. And the biggest problem with manufacturing and management accounting is that you can answer a question quite simply, but you don't necessarily get the marks. So you've got to make sure you put in this enough to earn the 8 marks. So you should know that the basics are of a product life cycle. It's a bit of regular business knowledge. It matters to budgeting. Obviously, you're budgeting. What you do at the start is very, very different. You know that you, for instance, are going to spend all your money in the development stages. So we've got to make sure we're going to earn 8 marks. Well, actually, we've got developing, launch, decline, maturity, growth. So we've actually got about 5 stages. So if we aim for sort of 2 marks each, just make sure you explain the stage and what it means. So first of all, I'm going to put in development. And it's basically all costs. As there is no sales. So something, name the stage, something to earn a 2nd mark. Launch. So So where a launch and growth, the next stage sort of ends, is actually one of these sort of intangible, woolly ideas. But however, different products will have different sales. So sometimes you have a big launch and you get lots of sales at the launch party, or or you've got pre-launch sales if you're lucky. But not necessarily money coming in. However, the launch, this is so marketing cost. Okay, there you are. So that's so it's all again all costs. You may be it's with some products you might early sales, because you've discussed it with regular customers who are desperate to get your new product, so they've helped you design it even and say, please can you make this for us, or we're looking forward to you starting, so you get something, but really add to the negative cash flow. Oh. If you've done Dave, don't worry too much. I wouldn't worry in this question, as it's a management accounting about difference between research and development costs. And I spelled something wrong. Development. I just put the O in the wrong place. So development still cash flow. The stages. It says explain. So so actually some products you might get early sales. So have I really explained the launch? This is where majority marketing costs occur. With some products, but likely still be negative cash flows. Yeah, I'm going to add enough to make sure we're getting the extra marks. Growth. The product now selling with a revenue stream which should get better, help cash flow and start to make a profit. I mean, we haven't got a specific product to talk about here, so we don't know. Some businesses literally can make a profit in the first year, and lots of products businesses don't expect profits in the first year. It could be 2, 3, 4, 5 years in some cases before something new will actually make proper profits for you. There may be some competition. That's a bit of business theory, really. So growth is now selling with an end maturity. So should be getting regular sales. In other words, the kind of sales that you expected is in the maturity stage. You can't predict how quickly the growth will happen or what happens in the decline. You might need to do some further development, in other words, Mark 2 or Mark 3. Competition. So may juice per item. Obviously we can apply, and that's it. So last one then, decline. Or come to an end. 2 years, 3 years, 5 years, depends what you are. I was just going to say, I sometimes talk about things like sea coal market, simply because I walk past it on the beach quite often in northern England. Sea coal as an industry has been traced back for about 1200 years, but apparently there are still a couple of people part-time picking it up off the beaches and selling it in places like Hartlepool, although there's lots around Saltburn and Marske as well, and up to Redcar. So it's quite possible to make a living picking up sea coal. A really, really old industry. Right, so I think I've actually already earned the 8 marks. Just no harm. Obviously, anything relevant that you can put in, basically, that makes sense without going over the top. 8 marks, 10 marks in the 10 minutes, 11, 12 minutes possibly in the exam conditions. So let's just finish this one off. All products come to an end. The phraseology is, if you actually I'm thinking of the proper phraseology. You know it's coming to an end. You know how to make it. Limited marketing. No capital. So if costs are reduced in line, it can still be profitable. The competition so have the same issue. So it is actually possible to be like the last person in a market that has shrunk compared to what it was before. One I used to be involved in a long time ago, like the rubber stamp market. There's hardly anybody making them left in the country, but we used to make thousands of them a day sometimes. For every till we used to have a checkbook stamp, all sorts of little things like that. And one by one the people have just disappeared out the market. It's a fraction of what it was in the 1980s. However, if you're not buying the new equipment and your competitors have disappeared, you could still make a few rubber stamps using the old equipment and still make some money out of a dying industry. It's all about cost control and not buying new equipment when the market is dying, making sure you get the best deals from suppliers for what might be limited supplies. And if you're the last person in the market, you're a monopoly. So if there's one day in the UK there will be one rubber stamp manufacturer and they're going to make a fortune out of every stamp. Well, not a fortune, it's still only a few quid each, but their profit margin should be quite good. And that will take a break on.